All right, should be up on YouTube. I'm running about 3-4 minutes late. No sound on what? Can you guys hear me now? That's so annoying. Test, test, test. Test, 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 test. Oh, so frustrating. Is the YouTube... Thanks. Thanks. Can the YouTube have sound?
No, that's what I'm saying. Nobody can hear you. I can't hear you. That's why I can't hear you.
I gotta restart my VTF then. YouTube has sound, Josh. Thanks, bro. Coming over, giving me misinformation. Test, 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 test. Test, test. Okay, everything is fine. Can someone confirm that the YouTube is still good? I have no idea what the cause of these technical difficulties were today. Someone just say YouTube is good. All right. I am an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure. There's one thing that's incorrect on here. DKNG, I sold my position. I forgot to take that off. I do not have a position in DKNG. I also got out of the FUBO that I had yesterday and added SOXL. DKNG I do not have. All right, let's do it. What a strong day. Holy guacamole. Let me make my camera bigger. Boom. Holy guacamole. SPYs are up 1.75%. Beast of a day. NASDAQ up 1.9 percentage points. Oh my God. And the Russell 1.5%. To the moon, Alice. I bet half of you don't even know what that reference is from. Anyway, I'm losing my mind. It's been a long but really profitable week. Such a strong day today. It's definitely exceeded my expectations. We talked about how yesterday's candle here with the SPYs was a really great defense for the bulls, right? Because it could potentially build a wedge as opposed to the next set of lower highs and lower lows. And then we had this huge gap up this morning. Solid gap up. And if anything, what we spoke about in the meeting is that this type of gap up is something that you could short sell into. But I said I wasn't doing that. I'm not going to short sell into this gap up, even though it's a very large common gap into this 440 area, which could potentially be some resistance. The biggest thing that I'm going to do is try to take some profit off, lighten up on some positions. So I sold a little AMD, got totally out of my FUBO position, took off some more SoFi today, did some stuff, reduced risk basically. And I also said that if anyone's looking at longs, and I got a few emails from people today, not even just one person, I got a few emails from people today about, oh man, Derrick, I didn't listen to the game plan in the morning meeting. I just started buying stuff right off the open. Yeah, no heck that's difficult. Look at this gap. And again, if anything, the good book of technical analysis would say that you would want to do some short selling into this. I didn't love the idea of doing short selling today, just after how that market closed, and also The fact that a lot of these underlying speculative names have been showing relative strength over the course of the last few days, I view that as actually a really positive sign for the market as a whole. So I definitely understand, not doing the short selling. That's what I was thinking of. But for guys who are going long in the first 2 minutes today, it's really got to be a stock that's like in play. The gap up is just too big to come in and, it just there's too much noise here because of this gap. You need to see how we pull back. And honestly, this pullback here over the course of these 10 minutes is very shallow. This is a very shallow pullback. And it almost wasn't until the ADMA was almost catching up to lows in some of these indices. SPY's caught up last. Q's and IWM caught up a little bit faster. Could you really even start to think about putting long positions on? So, the big picture game plan for me from this morning's meeting was to be very patient today. I didn't want to short right away. I wanted to book some profit on any longs. I just wanted the word was patience. The gap up this morning was just too big. Even though we got the continuation, if anyone was buying in the first 2 minutes of the day today, all three indices pulled back initially because of the size of the gap, and that's exactly what you would expect. So this is why, by the way, the big picture game plan is so important. There's a reason why I structure the morning meeting the way that I do. The morning meeting starts big picture down to small picture. Big picture game plan down to the individual equities that we're planning on focusing on based on our research. And the reason for that is if you're trading only on small picture stuff, or you're only looking at those individual stocks and you're not thinking about like a big picture game plan based on the market as a whole, it's like you're flying blind. You're flying blind without radar. You're driving the car, without any mirrors on the car. I don't know what other type of analogy I can come up with. You're skiing by braille. You got to pay attention in the market. You got to be paying attention to what the big picture game plan was, and the big picture game plan is something that I like to think I'm pretty good at, and it's based on a combination of those big picture daily, weekly chart technicals, the flow sentiment stuff that Pat provides to us, and gap analysis. And again, this type of gap says just be patient off the open. So that's what I was doing. Book some profit early on. Was very hesitant to put on new positions. I got out of that FUBO from yesterday entirely. I sold some AMD, even though I said I wasn't going to sell AMD on the way up. I ended up selling some AMD just because of the degree of extension. And then eventually, I executed this SOXL to the long side into this pullback. A little bit later versus lows is when I got filled. I took a decent sized position around 39.76 and caught what turned out to be honestly a really nice move in this thing today by being patient. If I bought the first 2 minutes of the day, I don't even know what stop loss I would use. Maybe I get shaken out, maybe I don't. And honestly, this isn't even if you bought in the beginning of the day today, the market was actually relatively forgiving because we only pulled back from a high in the SPYs of 439.40 to a low of 438.58. We only pulled back $1 here in that 10 minutes. We easily could have pulled back more. We easily could have even, pulled back to 436 in the market and tried to find some support into these moving averages over the course of that first half hour. So this was with the market being as strong as it possibly can get. And again, my biggest surprise today is the degree of the upside follow through on the gap. Sure, we gapped up really big. But if you ask me pre-market what the probability was of the SPYs getting up above the pivot high from October 7th today, I would have said it's a low probability, even though it's only like another $2 from where the SPYs were opening up. Yet we crushed it, right? We crushed it. Just a super strong day here for the market. Not fantastic confirming volume, but the downtrend for the SPYs is gone. You could even argue that we're in a very small time frame uptrend again. So let's do a little trend analysis. Really big picture, we're still in an uptrend. Okay? Medium picture. Because of today, I would say we are trendless. Right? We had lower highs and lower lows, and now we kind of broke that, and we're in this range. We are trendless. And small picture, you can definitely make the argument that the small picture, as of today, is now in an uptrend. So we still don't have like that perfect time frame continuity. As far as like bullish, bearish, neutral goes, which is another big thing I like to do as part of the big picture game planning and big picture understanding of the market, SPYs are back into neutral territory and quickly approaching going bullish. I think if SPYs start getting above 445 on a closing basis, that it looks bullish again. So in basically one day, we went from neutral all the way back to potentially bullish for the SPYs. Qs are neutral and still have a lot of work to do, though. Qs got above that 362.50, which was bearish back to neutral. Same thing here. Large picture trend is higher. Small picture trend, you could argue, is higher. Medium picture is range bound, is sideways. Bullish, bearish, neutral, neutral. I only think the Qs become bullish above like 370, 340 or whatever, so they're still a ways away from that. And the IWM is bullish. It's back up above that like 224, 225 level that we've been looking at on a closing basis. Closed basically right at 226. IWM had a big day today coming out of this range and hasn't fully broken out of its range, obviously, but it's a great kind of day one. And you got much bigger resistance up here at like 233 and change, 234 from this year-long consolidation that the Russell has been in. So really bullish day today. The biggest thing about today is that I don't think today was a day for like doing a ton of active trading. I think today was a day to reap the further benefits of good trades that were put on over the course of the last 3 days. And a whole ton of those we've spoken about, right? Like Fubo, given this huge gap up, given some continuation there. I exited my Fubo position at like, I don't know, 28.50, 28.60, something like that, up here on the way up in like the third or fourth candle on the day. So not doing any new work in Fubo, just reaping the benefits. And I wouldn't even want to buy Fubo now. It's like too extended. You couldn't even do it. It needs to reset up. So just reaping the rewards of buys from this week. AMD, right? Just reaping the rewards of the follow through. Very difficult to actually buy today. You kind of already need to be in it. I don't know. I haven't looked at MGM since we got in it. Yeah, MGM's still building out a bullish consolidation pattern. So something you could, absolutely still be involved in. So that's pretty much it. I didn't really do too much today. There were a couple things that were also, what did like TLT do today? Here's another example, right? TLT getting up to 140, which I said yesterday when we were talking about in the morning meeting buying 133, that 140 would be target number one. Got there literally by the next morning. So that was another one. But again, you can't really execute this today. And that was the problem with a lot of the stocks this morning that we were looking at in the morning meeting, is they were all too extended. From the moves from last day or two, plus gap up this morning, just kind of all made most of those names really too extended to really do too much with. There were a couple of names here that I thought were really disappointing. One was NIO. NIO's opening price action was so tough. I know some of you guys were looking at this and quite a good trade yesterday, and I think Felipe, maybe some of you guys held it. This opening bar, with the market as strong as it was, going negative was disgusting. It actually still closed above 36, so just really sloppy price action. If you look at the daily, NIO's actually still fully intact, but that was difficult. DKNG I got stopped out of today. Thing went negative. I mean, just disgusting. I had some stock still from yesterday, even though yesterday was not that great of a day either, that I was planning on giving more room to. And I just exited this. I got out because this was just not doing what it's supposed to do. You're going negative on a day when the market's this strong, trading up into the 21 EMA and then just going completely negative on me. That's also gross. We looked at the earnings names a little bit. I particularly wanted to look at Bank of America, Morgan Stanley, and WBA. WBA was the one that I had the most amount of interest in. I ended up not trading any of them. This opening BAC price action here on the way down, I just thought just very, very difficult to do anything with that. Morgan Stanley overshot its gap fill. Same thing, very difficult, even though it bounced back and closed pretty decently. I actually think that the best one was this WBA. I mentioned WBA $48 as a potential buy today. And what did it do? It sold off very hard on momentum instead, even though I thought the numbers were good, and then it caught a random pivot low here and ripped up. I don't know if this coincided with the conference call or something like that, but then it ripped up on volume. And I went over a similar pattern yesterday I don't remember what stock it was, but the company started with a negative candlestick, negative momentum Maribozu type candlestick, and eventually, a handful of bars later, half hour later, whatever, it broke that opening momentum high. So when you have a retracement of a momentum move that exceeds 100%, that's really the only time that you can start looking at this to the upside. And it just so happens that it never broke 48 in the beginning of the day, which was the level that I was really looking at for a buy. So then you have this thing ripping back up, getting back above the highs of the open from the momentum sell-off. So that means that I can actually go long this thing, and then it's clearing 48 bucks at the same time. So I ended up not being involved in that trade. I kind of honestly took it off my radar when I saw this thing fall apart in the beginning of the day. But if you kept it on your radar through this 48, it kind of worked. It probably was a lot of risk. What was the risk on this? Yeah, a lot of risk. I would have had to have given this to the 5-minute bar low to trade it right, which would mean buying through 48 with $1.20 worth of risk. So I probably wouldn't have taken it no matter what. Even though it is an earnings name, I don't want to come in and risk over $1 in Walgreens, WBA. It's not a momentum type stock, even though it was on earnings, and it's when stocks are trading on earnings that they can give much bigger moves. So that is really all I've got. You know, I don't have too much to talk about. The name of the game today was patience. And if you were patient, if you weren't too aggressive, if you were just, reaping the rewards of the work from the last couple of days, you still could have selectively gotten into a few things today and made some money. And that's pretty much it. It was still, for me at least, a pretty good profitable day. So I guess with that said, I am happy to take a look at any questions that you guys have. So Robert, here's the first question I'm seeing. It looks like a long one, so I'm just trying to read through it. Since I've joined the VTF, I've been able to recognize many bad habits in trading and fix them. But one thing I could not. Some days I am very disciplined, but some days I trade all FOMO. And giving back all the gains. I can't figure out what, because that mental pattern. Would like to hear your words or any advice. Okay. Which you have given your junior traders. Okay, yeah, for sure. So basically the question that Robert is asking is, so Robert here joined the VTF. I'm not even sure how long ago. Not too long ago. And it seems like you've made a tremendous amount of progress in your trading over the time that you've been here, which is awesome. But that by no means means that you are a perfect trader, because the perfect trader does not exist, right? I've been doing this for over a decade. I am not a perfect trader. I make mistakes all the time. Progress is in learning from your mistakes, not repeating your mistakes, learning your personal strengths and weaknesses that you have from your own trading. Fubo's up a lot here after hours. Learning your personal strengths and weaknesses and building on those strengths and working to eliminate your weaknesses. One of the harder things about trading, and this is kind of what you're describing here, is to be able to do the right things consistently, day in, day out, having to always do the right things. And this kind of goes back to one of my trading themes. I kind of want to make a video on this at some point soon where I go over all my trading themes. One of my trading themes, and we spoke about this in an afternoon meeting recently, is it's kind of a weird juxtaposition. Because on the one hand, I preach to everyone the key to consistent profitability is to trade consistently. And the only way that you can trade consistently is kind of based on rules. So that kind of implies that you should be doing the same thing over and over and over and over and over again. That's partially true. But at the same time as I say that, I also say that one of the big keys to successful trading is to recognize that every day is different, right? Every day is different, and you cannot be as aggressive every single day as other days. There's going to be certain days when you sit down in front of your trading station, you're doing your research, and the market is giving you a ton of opportunity. And there's going to be other days, like today, where you're doing your research and you're like, wow, like I really don't have much for today to focus on where we're gapping is difficult, or there's nothing that's in play that looks good to me, or kind of whatever it is. So you need to be able to have consistency in your rules, but you also need to know when to be aggressive and when to kind of not be aggressive, and you need to kind of understand your own personality as well. And again, that goes back to why the big picture game planning stuff is so important, right? The big picture game planning today was said, don't be aggressive off the open. There's nothing to do. Like, we're gapping up too big. Let's see how the dust settles on the small time frames after we've given this market 15, 30 minutes or so of time to kind of settle those gaps on the small time frames. So again, to kind of more directly answer your question, one of the difficult things about this business is that you have to be able to do the right things kind of day in, day out, day in, day out, day in, day out. And, you know, we're just human, right? Like, you're going to have days where you didn't sleep well last night, or maybe days where you had a few too many drinks with friends the night before. That may or may not have been me yesterday, last night. You know, so there's going to be days where you're just not as mentally on point, or the opposite. Sometimes my problem is I'm too pumped up. You know, like, I do my city bike ride to New York City, like, everything's going on in my brain. I'm like all roaring to go, and then the market's telling me I shouldn't trade, and all I want to be doing is just press buttons and press buttons and press buttons. So it all comes down to knowing yourself, and part of what you're describing, Robert, I think is definitely just an experience thing. It takes a lot of time to be able to both recognize and execute on doing more versus doing less. And as far as FOMO goes in general on trading, this is something that's really difficult for all of us. It's okay to miss trades at work. You're never going to be able to capture them all. And especially if something you would have had to have executed poorly or take undue risk in order to actually be able to capture the move, then it's probably a good thing to miss some moves. So, you know, it's just what you got to think about. It's what you got to work on, and it's definitely an experience thing. And you know, just kind of keep at it and keep understanding yourself. And I think that you'll keep steadily improving over time. Next here from Brandon. Can you walk through your entries on breakout momentum type names? Do you prefer to buy a break of a candle opening 1 minute, 5 minute, 15 minute? Or do you prefer to buy a pullback assuming a gap, or maybe buy an inside 5 or something? Yeah, Brandon, it heavily depends on the big picture. So, like, my ideal entry on a breakout is to actually just buy the level of the breakout, or like I teach in that first class. Like, the breakout's at $50, or in WBA today, the breakout's $48. I just want to buy $48 and set it and forget it, and that's pretty much it, assuming that the risk was appropriate. I want to participate in the actual break of the level itself. Now, it's not always as simple as that. It's not always as simple as, you know, what you talk about in a classroom. Sometimes your stocks have breakaway gaps, right? They gap above the price where you wanted to enter. Well, then you got to assess what game plan can I have to build into this appropriately, right? Maybe you start with a feeler and then you build into it versus what the previous level was. Or sometimes it's a big gap up, maybe it's an earnings name or something like that. Then, you know, you're watching kind of the opening movement. You know, you get that initial opening strong candle followed by a rest period. I love buying the break of that rest period for momentum continuation on like an earnings name. Or, you know, sometimes it's as simple as like that SoFi the other day, when it was I think it was SoFi. So sometimes it's as simple as just seeing that heavy volume momentum coming in on that first bar and looking at it and saying to yourself, oh, this is clearly something special. It doesn't normally have this big a volume on the opening candle with this type of momentum. Let me buy some versus that opening low. Again, assume that the risk is appropriate. So it's a little bit of a difficult question to answer, Brandon, because I think it's so specific to that circumstance. You know, what is the exact circumstance of where the stock is opening, where the market's opening, what the news is, if there is news, was it earnings, you know, and then there's different ways to execute kind of based on that. So I hope that helps. Brian saying you could even say that there's an inverse head and shoulders in the spies. I see that a little bit, but you know, we'll see this here with a neckline. It's probably a descending neckline or something that's potentially breaking today. You could argue it's 445. Really, an inverse head and shoulders should be coming from a downtrend, and yeah, this is a downtrend, but it's a very minor one. So, yeah, we'll see. Things are definitely looking more bullish, though. Tomorrow is Options X. Is it quad witching? I don't know. Is quad witching October? What are the quad witching months? There's 4 of them a year. Friday, June, September. Yeah, that was last month, and December. So we'll have Options X tomorrow, but not quad witching. Quad witching is usually the crazier event. Next year from Shane. Yesterday you called out a king-queen candle setup in the IWM. Can you please talk about the setup and what this is, the psychology of the 2 candles, and what we should be on the look for? Sure. So yesterday I mentioned that there is a potential king-queen reversal. I mentioned it in real time on the VTF at lows in the IWM. A king-queen reversal is basically a hammer that forms over the course of 2 candles, right? Like if you could take these 2 candles here, so a lot of the formation of candles, you know, they just stop in this case every 5 minutes, right? So you get, like, I'm trying to figure out the right words to describe what I mean here. Well, think about it like this. If you could take this candle here, this 10:15 a.m. green 5-minute candle, and you could overlay it on top of this 10:05 10 candle, the red one, if you could combine them and basically make them one candlestick, what would you be looking at? You'd be looking at a huge hammer, right? And I know you understand the supply and demand implications of a hammer. This would basically just be a huge hammer that's formed over the course of 2 candles. If you could combine these 2 candles, you would have a very tight body and a really long tail. So a king-queen reversal setup, it is basically a hammer that was formed over the course of 2 candles, right? Like if the timing difference was maybe a little bit different on these, it would be a hammer, is kind of what I'm trying to describe. So that's pretty much it. It's the same supply and demand implications as a hammer. It's the same thing that you would want to see. You want to see an increase in volume. There was an increase in volume on the red candle, you know, one of the higher bars of the day for the IWM. You also want to see extension. You didn't really have that so much here, right? Like usually in order for this to be executable, so this is still worth noting, but I don't think it's something you would execute on. In order to execute this, you would want the space between like where this green bar is closing and lows to be at least 1-to-1 on where this green bar is closing and the ADMA. And so you definitely don't have the extension. But you got the volume, you got the shape, you know, pivoted here, and then that turned into a V bottom and went all the way up. Similar to how, you know, they might call this like a king-queen reversal pattern, but similar to how I don't call hammers reversal candlesticks, I call hammers retracement candlesticks. Really, this should be a retracement setup, right? Retracement to where? Same thing as hammers. Right back into the ADMA, right back into the 21 EMA for that time frame. A lot of the times, I know it's not actually the case with this, a lot of the times when you have like a king-queen on a 5-minute, you'll actually have a 15-minute hammer, which you don't have here. You had a negative Maribozu followed by an inside 15 and up. But a lot of times the king-queen on a 5-minute looks like a 15-minute hammer on a 15-minute chart. And that's pretty much it, Shane. That's what that setup is. And this just happened to turn into a full-on reversal yesterday. But it doesn't have to do that by any means. Gabriel asking about plug. Yeah, you know, great call out from a couple of you guys this morning on shorting plug. I know Josh was shorting it pre-market. Great job on that trade. I kind of thought it was hard money just because of the momentum here. But you guys recognized and took advantage of the upside extension. It pulled all the way back, you know, from a high. It was above $34 pre-market to, you know, 31 and change intraday. There's nothing else to talk about. It's too extended. You know, even after today's candle, the ADMA is at 29.20. This thing needs time. It just needs time. In theory, you could still even short it or be shorter. If you shorted it today, you could keep that short. If I shorted this today, which I didn't, because I didn't think it was going to be easy money, if I shorted this today, I probably would swing it. So hopefully Josh still has some of his short, and he's keeping it and looking for a little bit of a further move, maybe to fill the gap or into the ADMA, and can kind of reassess it as it goes down. But at this point, plug just needs time. If you're not already in it, there's nothing to do. It's too extended. It needs to reset up. Felipe is still in NIO. His trade from yesterday is versus yesterday's low. So he's still in from yesterday's low. So good stuff there. Not getting pushed out. Felipe. The Tampa man, Aaron M, asking about AFRM. Yeah, you know, highlighted a couple days ago on this bull flag, gave some continuation. Similar situation here. I think we mentioned in the morning meeting. It's just too extended right now to do anything with it. If you're already in it, trim and trail, stick with it. It's super bullish. It still looks good. But as far as an entry, if you're not already in, it needs more time to kind of reset up. It's too extended from the ADMA, and there's no setup available right now. Fubo Sportsbook named authorized gaming operator of NASCAR. Okay, so that's what's bringing Fubo up after hours. I got out of my Fubo today. And space. Virgin Galactic begins planned vehicle enhancement and modification period. Whatever that means. Space getting hit after hours. Someone asked me about space this morning. I mentioned I hate it. Next here is from Jerry. When trading for cash flow, do you predominantly have bids at levels on the way down, or are you waiting for signals, or both? Both. It depends on tier size and game plan. Sometimes I'm kind of just doing it incrementally based on math, spacing based on math, and sometimes it's a little bit more based on signals and extension, and it's extended the upside. I take it off with a plan of automatically rebuying it on a touch of the ADMA or something like that, because not that the ADMA is support, but just because I just am trying to create the cash flow difference between the extension and where the ADMA is. Sometimes that can even lead to buying a higher price, right? Because the ADMA catches up if the momentum continues or whatever. But yeah, the answer is definitely a bit of both there. Next from Sebastian, when a stock gives you a 2-to-1 move, do you keep a minimum piece of that, like 0.8 or 1 of the ratio, or you can give it all back to break even? Hope you can understand the question. I sort of understand the question. I can tell you if I get 2-to-1 on a move, I'm definitely not getting out. You know, you always want to keep some of it. Or maybe your question is like, do you sell? I don't fully understand the question. But you know, the idea on the initial move, the initial sales, is to get risk covered. You know, so you could sell 50% of your position at 1-to-1 on your risk and have your risk covered. You could sell 25% of your position at 2-to-1 of your risk and have your risk covered. So it depends a little bit. I'm a big fan of doing the 50% 1-to-1 thing. So I do that a lot. Unless I've got really high conviction, then I'm more greedy. I also never, I don't know if this is what your question is asking. I never use my entry price as a stop loss, and it's kind of a pet peeve of mine, actually, because the market doesn't know or care what my entry price was. So I'm using stops based on the stock itself. All right. Yes, Brandon, that's right. Yeah, quad is December. That's right, Jerry. Sorry, just reading through the comments here, looking for questions. Nice, Gabriel. Good job on plug. Next I'm seeing here is from NYC Steve. The 2 inside days in MGM. Yeah, MGM looks good. I like it. I'm loving the rest here. It's a bull flag, giving the ADMA time to catch up. ADMA is still not caught up, but as far as momentum goes, like this is like a beautiful setup. I'm a little bit concerned, like if this was like one of those crazier momentum stocks, I'd be excited to buy this tomorrow. I'm a little bit nervous because I don't view MGM as a momentum name, and it's still extended. But otherwise, this thing looks fantastic. It's starting to reset up. There's a potential another buy here above today's high for momentum continuation, and ideally, people are still in this from 2 days ago from 45.50 as a swing trade, and they're just wading through this consolidation, looking for another leg higher. So yeah, I do think you have another trade setup coming, building in there. A little bit nervous about the extension. Next here is from Daniel in YouTube. What are your best websites to look for stock news confidently? The best thing I use for stock news is the ProDesk virtual trading floor. Pat here and some other guys on the team, but predominantly Pat, do a fantastic job getting the news in here in real time, pre-market every day. We're getting all the earnings information in there. Pat had a ton of information in there early this morning on all the different earnings reports. He's gonna keep that up for us. So the number one thing I would recommend to you, Daniel, on YouTube is to get involved with the ProDesk VTF, so you have access to that. I do also like using this getvec.com. Which is now not loading. There it goes. Yeah, this getvec.com. So in the morning here, you can come in and it tells you all, these are the companies that reported earnings this morning, DPZ, UNH, etc., Bank of America. You can click on one. I just clicked on Morgan Stanley as an example, and it'll give you all the information. So today, here's all the headlines from the earnings report today. Here's analyst changes. So that's solid. It gives you all the upgrades, the downgrades. You could type a stock in, if I want to know that, if I want to remember, which day was it that SoFi got upgraded to Morgan Stanley? Oh yeah, it was October 11th. So you can go in and provide that. So getvec.com is a solid one that I use, and I use the ProDesk virtual trading for. That's it. Next here from Brandon. When you're reading tape, do you focus on the prints or the quotes or the graph more? Well, if I'm reading tape, I'm not looking at the graph. I believe GetVec is free. If I'm reading tape, I'm not looking at the chart. I'm looking at the chart, but I'm not reading tape off the chart. I'm reading tape off the tape. So it's you're looking at the level 2 in combination with the tape itself, right? So like Fubo here, I'm looking at the level 2 in combination with the tape to see how these prints are printing versus the bids and offers being shown. Is there hidden liquidity? Is there a refreshing buyer? Is there size? How are things getting printed? So it's definitely that combination. Getvec.com. Gabriel just wrote it there for you. Jerry, so in hindsight, MGM was an A-type trade. Would you size up and take less off the risk? Definitely size up, maybe take less off on the risk. And I think in real time it was an A-plus trade, and in hindsight. So, yeah, MGM really nice 2 days ago. All right. I know I kind of blasted through the questions there a little bit faster than I usually do. Is a white print? Yeah. So white prints are hidden prints. So hidden prints are usually going off in the spread. So that's exactly what a white print is. I think I have an intro to tape reading class, Brandon, in the training program. I'm not sure if you've watched it, but if you haven't, it's a great starting basis. Yeah, check it out. All right, gang. Like I said, I know I blasted through questions a little bit faster than usual today, but I'm honestly exhausted, so I'm trying to get through it today. So I'm gonna see everybody tomorrow. Thanks for the compliment, Brandon. You guys have a great night, and I'll see everybody in the morning.